Welcome back to another edition of Fantasy Stockball with New Level Investment Management LLC. Year 4. We started in 2013, year 4. This is the 2017-2018 season. And again, we like to thank all of our viewers out there that have given us support over the years, given us great feedback, comments, or any questions that they may have. Again, what we're doing is we're bridging the gaps of the unknown of the stock market. A lot of people don't, know how to, trade or buy stocks and what to do, what to look for, how to analyze. And we're just trying to bridge that gap and kind of make it, not dumb it down, but simplify the process with fantasy football, right? Because everybody knows about football. So we're just comparing players to stocks and trying to give you some tips and hopefully ultimately make you some money. So that's what we're all about. 2017-18 season. Let's go ahead and get started. We're going to give you our quarterback for this week, and that's going to be Big Ben, Roethlisberger. The Steelers are going up against Cleveland, and they probably did one of the dumbest things in the offseason, letting go their best corner in Joe Hayden. So who's going to cover Antonio Brown? Who's going to cover all the other receivers? And of course, Le'Veon Bell coming out the backfield. So Big Ben's probably going to have a huge day dumping the ball off there and going deep. I'm looking for him to have 300, 400 plus yards, a few touchdowns, and I'm going to compare him with Macy's. And here's why: because Big Ben has been in the league for several years, has taken a lot of bumps and bruises. He was actually thinking about retiring this year. And Macy's, the whole retail sector has taken their fair share of bruises this year. The Amazon effect, right? So there's been a lot of bankruptcies in this space. There's going to be some consolidation. And I think Macy's, although they still need some work and they got to consolidate stores and get rid of the stores that are not performing, I think if you can buy mediocre companies at a great price, it can do wonders for your investment. And the reverse can happen as well. You can buy a great company, a la Amazon, at the wrong price, and your investment goes down south. So I think these are a good level for Macy's. I'm just going to read you some quick stats real fast here. So for Macy's, now some may call this a value trap. I call this a good opportunity. Their forward price earning ratio is 8. Price to sale ratio is 2.7. Price to book is 1.5, a little high. But their return on equity is 16%, and their dividend yield is over 7%. So that's major. And one more thing, with the recent sell-off for Macy's, their market cap is $6.7 billion. To put that in perspective, I love Under Armour, but their market cap is $7 billion. So Macy's is almost trading around small cap levels, which means anybody can come in and buy this company. So that's why I like Macy's at this level. Next up, I'm going to give you our running back for this week, and that's going to be Shady McCoy. The Buffalo Bills are going up against the Jets defense, and they also traded away probably their best defender as well in the middle. So I look for Shady to get loose and get off, and I'm going to compare Shady with eBay, and here's why. eBay's been around just like Shady's been around, right? He's almost approaching that 30-year mark for running backs. But eBay is one of those forgotten e-commerce companies, right? You always think Amazon, you think Alibaba, and all these other new kids on the block, even though Amazon has been around for a long time. It's just that they're taking up all the spotlight. You kind of forget about eBay. Here's why I like eBay. eBay actually makes money. Now, they only have about $9 to $10 billion in annual sales, but they keep a lot of that money. What does that mean? That means their balance sheet is strong. They got good cash on the balance sheet, a lot of retained earnings, and they also, so from a market cap perspective, they're about $38 billion, and that's kind of high. But when you think about Alibaba around $429 billion and Amazon at $458 billion, that means that any one of these big tech companies can take a piece or buy the entire company, and that should be great for investors. And last but not least, I'm going to give you our receiver for this week. And anybody that has been following Fantasy Stockball knows that when I start the season, I got to go with the Giants and Cowboys. And I usually either go Eli or I go Odell Beckham Jr. And it's because when these two teams get together, especially opening day, Sunday Night Football, something great is bound to happen. And I just look for Odell Beckham to have a great game. He's nursing the ankle injury, but I look for him to get off and have a really solid game, maybe get in the end zone once or twice there. And I'm going to compare Odell Beckham with Facebook, and I just think that these two stories just rival each other, or they have great similarities, right? So Odell Beckham had a lot of hype when he was drafted, but what happened, right? He missed like the first 6 weeks of the season. Everyone thought he was going to be a bust. He comes back in the league late in the year and shreds it. I think goes for over 1,000 yards in like 10, 12 games. And same thing with Facebook, right? They were the largest IPO at that time, $100 billion, all the hype. They IPO, the stock tanks, and it took them a while to really get on traction, just like Odell Beckham. But Odell Beckham, of course, is one of the best receivers in the game. He makes some of the greatest catches of all time. And Facebook is hitting on all cylinders right now. They have so many levers to pull, right? They have Facebook proper, they have Instagram, and now they're going to start to monetize WhatsApp. They also have Oculus Rift. And one of the great things about Facebook is when you invest in companies, you want to invest in companies that have a barrier to entry. In other words, it's hard to penetrate that market. Facebook is at that point, especially with social media, right? You have Snapchat, where Instagram pretty much took that out. Twitter, Facebook pretty much destroyed a long time ago. So you have a duopoly in the ad space, online advertising space with Facebook, Google with search, and Google with YouTube. So I really like Facebook at these levels. And I'm gonna give you some quick stats for Facebook to put this all in perspective. Gross margins for Facebook is 86%, operating margins is 46%, profit margin is 41%. Well, what does all that mean? Well, let's give you some perspective. Amazon, those same stats, gross margins 36%, operating expense 2.3%, and profit margin 1.3%. That means that they're not making any money. Facebook is. I go along with Facebook. Well, that's all we have for you this week. New Level Investment Management LLC Fantasy Stockball Week 1.